Hi everyone, this is Prashad Parthiban. Today I'm going to take a training on business owners policy. In my last training videos, I have taken sessions on commercial property, which covers the first party, which means if I have a company, it covers my building, my property that I use for my business. Similarly, I also taken training on general liability, which will cover third party. Say if I run my business, in something happens to my neighbors or my following locations, then I use general liability. Now the catch here is these are used for big businesses, like if I have a business with 10,000 employees and I need an extensive coverage, I use these coverages. Second thing is these are very costly policies, like if you have a company, imagine that you need to get commercial property for your first party, you need to get general liability for your third party, you need to get business income for if there is anything happens to your income. So it's a costly process, right? If it's a small company, they cannot have so many policies. That is the reason why ISO have come up with this business owners. The benefit of this policy is it combines both the first party, which is property coverage, and the third party, which is the liability coverage, along with other coverages like business income, theft, and everything else. So list of loss exposures, like we all know loss exposures is nothing but possibility of loss. So it covers building. If I have a company, any building that I own, I will have required coverage using business owners. And business personal property. Say I use some personal items like my computer or laptop for my business, then I will have required coverage under BOP. Personal property of others. Say you are running a business, maybe a dry cleaning where you have dresses from someone else, then you will have required coverages for that category also. Business income, right? Say I run my business and I have some personal property like Xerox machine or computers which got damaged, and for the next 2 to 3 months until it is rectified, I cannot run my business. So it gives some kind of benefit in terms of business income. Say you are getting some income of $10,000 every month, then that income will be recovered using this coverage. So this is all first party, right? Now coming to third party, premises and operations liability. So this is what, say if some customer comes to your office and due to the wet floor they slept and they fell and they damaged their body. Now this coverage will make sure that it gives required coverage. Then products and completed operations. So I developed some product, and due to the default nature of the product something happens to my customers, then I can use this products and completed operations. Contractual liability, like if I assume some contract, say like when you sign a contract with the third party clients, if something happens I will make sure that it is taken care, then those contractual liabilities also will be taken care under this contractual liability. Personal and advertising. Say you talk about somebody or you write some newspapers that damaged the personal reputation of someone else, then it is accidental, then this coverage will take care of that, like any lawsuits are happening and it will give required coverage. Employee dishonesty. Say you have an own employee, due to his dishonesty kind of done some malpractices, then this coverage will make sure that you have required coverage for that. Theft of money, like some theft happen in your company, then this coverage will give you a required coverage. Forgery or alterations, right? Like if you have a product that has some kind of forgery due to the third parties, then you have this coverage, forgery and alteration. As a result, you have required coverage. Equipment breakdown. You have some equipment that got broke down due to some electrical or mechanical issues, you will have coverage. If you see this is an exhaustive coverage, right? It has first party, third party, business income, what else, like it has advertising injury. So for if you go with traditional policies, you need to get separate commercial property, you need to get separate general liability, you need to get separate business income policy, you need to get separate professional liability. So all those things are included here, right? So it has so much of benefits. Now since it is having so much of benefits, many people will prefer this policy. How do we filter that? That's what the second part is. So if not every company can get business owners. There are some rules. Only if you are a small business, like you have a company where only 50 employees are there, then you are eligible for business owners. Else you need to go with the traditional commercial property or a general liability. So I have given some basic set. This is not the entire list, some basic set of examples. Say if the total floor area is less than 35,000 square feet. If it's more than 35,000 square feet, you have to go with either commercial property or general liability or some other policies. Annual gross, say it is less than 6 million, like your overall annual gross is less than 6 million. Office buildings, not more than 6 stories or not more than 100 square feet. Similarly, the contractor's payroll, if you have a contractor's business, the overall payroll should be less than 3K. This is a few examples. Similarly, we do have some restrictions. Because the business owners is giving excessive coverage, we do not want big companies to use this BOP. The reason behind this is, the way this policy is rated is done in such a way that it kept the small business into account. If you take a larger business and give this policy, the premium will not match with the overall loss exposure. That's the reason why they have this eligibility criteria. So now we have seen why we need business owners. We have seen what are the different loss exposures in business owners. We have seen who is eligible for business owners. Finally, how do you calculate? Like if you take personal auto, you use driver's experience, car's age. If you take workers' comp, maybe payroll. Similarly, for this business owners, it is typically like, maybe one thing I want to add here. This business owners is structured in such a way that like a homeowners policy. If you take homeowners, we'll have property and liability. The exact structure, so here also we have property and liability. So the rating factors could be territory, where is your building located at, which territory, because it could make a huge sense, right? If you have a territory where there is a lot of crime versus a territory where there is less crime, the premium could differ. Type of construction, right? Now, what kind of construction you have, like, and then public fire protection. This is where, like, it's a kind of rating system between 1 to 10. If the rating system is good, the rating value is good, that means your fire station or fire extinguisher is very close to your building. If it's very long, then the rating will be like more. So based on that, your premium can differ. Occupation of building, like who is occupying your building, what kind of business you run in your building. So those factors also will play into account when you come with premium calculation. Presence of sprinklers, is your building having all the safety features or not? And deductible, like how much deductible you are ready to own. Again, this is very small list just to give you an example of the primary factors. So pretty much this is what I was planning to cover. Basically, why we need BOP and what are the loss exposures, what is the eligibility criteria for BOP, and how do you calculate rating, and what are the basic factors. On top of it, we can have more factors too. So in our next section, I'm going to talk about different integrations that we need for this business owners policy. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye-bye.